Good morning, I'm Maiki Oreta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Philippine IT-BPM industry is bullish, targeting $42 billion in export revenues and nearly 2 million jobs by 2026. State insurer PhilHealth says the return of 60 billion pesos will help boost benefits and advance universal health care. And in world news, U.S. President Donald Trump says Ukraine can reclaim territory seized by Russia with NATO's support. First, let's take a look at how global markets moved overnight. U.S. stocks closed lower on Tuesday after Federal Reserve Chair Jerome Powell said the central bank must strike a balance between a weakening job market and stubborn inflation in its rate decisions. Powell gave little hint on the timing of future cuts. Last week, the Fed delivered its first rate reduction of the year and opened the door to more.
The stock market today, I think, is doing a bit of a natural take a breather after the sprint it's been on in the last few weeks. In particular, you had a lot of breadth with a lot of things and a lot of optimism going underneath. And I would suspect some of today's market action too is people knew that Chairman Powell was speaking at this around noon, and they were wanting more clarity, the sort of clarity we got out of Jackson Hole, and instead we got the sort of mixed message that we got out of the last FOMC meeting.
The Dow Jones Industrial Average lost 0.2%, the S&P 500 lower by 0.6%, and the Nasdaq lower by about 1%. Over in Europe, markets ended mixed. The UK's FTSE down flat with a downward bias. Germany's DAX higher by 0.4%, and France's CAC 40 higher by 0.5%. Here at home, the peso slips as investors rush to the safety of the U.S. dollar amid jitters over the French economy, putting fresh pressure on the Philippine currency and import costs. Data from the Bankers Association of the Philippines shows the peso closed at 57.30 to the dollar on Tuesday, down 24 centavos from Monday's 57.06 finish. The local unit opened stronger at 56.95, its intraday high before weakening to as low as 57.33. Dollar volume surged to $1.86 billion compared with $1.27 billion in the previous day. The Philippines' flagship IT-BPM industry remains a bright spot for the economy, expecting to hit $42 billion in export revenues and nearly 2 million jobs by 2026. The IT and BPO Association of the Philippines says the sector has already created 450,000 new jobs and generated $10.5 billion in revenue since 2022. The country is also positioning itself as a global hub for capability centers, attracting more multinational companies who locate here. Growth is being driven by key client sectors such as banking, financial services, and healthcare, solidifying the industry's role as a critical driver of exports and employment. PhilHealth is returning 60 billion pesos in surplus funds, a move it says will boost member benefits, improve service efficiency, and advance universal health care. Senior Vice President Israel Vargas said the fund will support programs like Gamot, which provides up to 25,000 pesos in free medicines for members each year. The surplus will also cover free anti-cancer screenings, expanded benefits, and the government's zero-balance billing program in DOH hospitals. Part of the money will go to digitalization to improve systems and service delivery, with PhilHealth promising strict anti-fraud measures to safeguard the funds. President Ferdinand Marcos Jr. signs Executive Order 95, a new policy aimed at strengthening workers' rights to organize and join unions, seen as a big step toward aligning the country with international labor standards. The order bans law enforcement agencies, including the PNP and the AFP, from red tagging workers or trade unions as communists or terrorists without legal basis. Labor groups call it a major victory for workers' rights. The guidelines also bar government interference in legitimate union activities and restrict police and military involvement in strikes to maintaining peace and order. The measure responds to international labor recommendations, a move that could help improve the country's investment image by addressing concerns over violence and red tagging. On another front, GT Capital Holdings of the Bilyonaryo T family is deepening its bet on banking, boosting its stake in Metro Bank with an 8.2 billion peso share purchase. The move highlights stronger commitments to the country's second largest private lender. In a disclosure, GT Capital said it acquired 113 million Metro Bank shares at 72 pesos and 52 centavos each. The transaction lifts its ownership from 37.32% to 39.84%, or a total of 1.79 billion shares. The House Appropriations Panel has cleared the 6.7 trillion peso proposed 2026 budget, redirecting 255 billion pesos from flood control to healthcare and social programs, a move seen to impact public services and investor confidence in budget discipline. Realignments include a 60 billion peso subsidy for PhilHealth and additional funding for social services. Money will go to programs such as assistance to individuals in crisis and medical aid for indigent patients. Appropriations Chairwoman Micaela Swansing stressed the changes came from agency requests, not lawmakers. The panel approved the measure with 54 votes in favor, 6 against, and 4 abstentions. The Anti-Money Laundering Council has frozen the bank accounts of Senators Joel Villanueva and Jinggoy Estrada, Representative Elizalde Co, and several former public works officials, all linked to alleged irregularities in the flood control projects. The freeze order follows NBI findings that recommend prosecution of Villanueva, Estrada, Co, former District Engineer Henry Alcantara, former Undersecretary Roberto Bernardo, and former Caloocan Representative Mitch Kajanuy. Justice Secretary Jesus Crispin Remulla said charges could include graft, indirect bribery, and malversation of public funds. Remulla also confirmed the DOJ is reviewing the possible liability of COA Commissioner Mario Lepana and his spouse, whom Alcantara identified as a contractor in a Senate testimony. The Philippine Competition Commission is probing alleged bid rigging in DPWH flood control contracts, a case that could carry billions in penalties and undermine investor confidence in infrastructure spending. Contractors found guilty face fines of 100 to 250 million pesos per violation, penalties that could add up across multiple projects. The PCC is reviewing companies named in the President's State of the Nation address and Senate hearings, gathering bid documents, communications, and other records. Red flags include identical cost breakdowns across firms, subcontracting work to losing bidders, and access to confidential pricing. The Commission has also requested DPWH and SEC documents with Senate testimonies to be used as evidence. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most, your bottom line. Welcome back. Let's check on how Asian markets are doing this Wednesday morning. Right now, the Nikkei 225 is in the red, lower by about 0.5%. Hong Kong's Hang Seng Index going the other way, higher by 0.3%. Shanghai's Composite up by about 0.3% as well. And Singapore's Straits Times Index flat with a slight downward bias. Taking a look here at home, the local burst fell back below the 6,200 level as profit-taking weighed on the market. The PSE Index dropped 97 points or 1.6% to 61.18 rather. All sectoral indices closed lower except the mining and oil counter, which gained about 4% on firmer gold prices. Investor sentiment was also dampened by ongoing corruption probes into flood control projects and the weaker peso. Taking a look at the main gauge, as of 10:17, the PSC index is in the green, higher by 0.3% to 61.37. All shares index in the green as well, higher by 0.2% to 3,700 flat. The financials, the industrial firms, holding firms, and services and mining and oil counters are trading in positive territory, whereas the property counter is limiting the market's upside, down by 0.4% in early trade. Total volume is at 191 million shares, valued at 534 million pesos. Market breadth is positive. We've got 63 advancers, 47 decliners, and 50 stocks unchanged. Taking a look at the currencies market, the peso opened at 57.33 against the dollar, down from its previous close of 57.30. The Lopez-led First Gen Corporation is expanding its regional footprint, committing up to $80 million or 4.5 billion pesos for a geothermal development project in Indonesia with partner PT DSSR Dayamas Sakti. President and COO Francis Giles Puno says the first phase will cost about $30 million, while drilling, expected to start next year, will require another $30 to $50 million. Vice President Erwin Avantes says the partnership aims to develop 6 geothermal projects through the drilling campaigns. Last August, subsidiary PT First Gen Geothermal Indonesia signed an agreement with DSSR to tap up to 440 megawatts of geothermal resources across Indonesia. The joint project will cover strategic fields in West Java, Flores Jambi, West Sumatra, and Central Sulawesi, marking a major step in scaling clean energy capacity across the region. Now, the spotlight is back on the Philippine bond market, with global risks, slower growth targets, and governance scandals weighing on sentiment. The Bangko Sentral ng Pilipinas now sees the 6 to 7% growth target slipping to 2027. Yet the bond market remains remarkably resilient, even amid the 100 billion peso flood control scandal. To help us read the risks, reforms, and the opportunities, we're joined by Dino Aquino, the Vice President and Head of Fixed Income at Security Bank. Good morning, Dino. Thank you for being here with us.
Yeah, good morning, Maiki. At least it's green today. Last time it was red.
The main gauge, yeah. But we've got a long ways to go to make people happy in that regard. But let's talk about bonds today. The first half was a pretty volatile period. First quarter was amazing. Second quarter came the risks of higher inflation, and the tariff uncertainty and the rate cuts. So that second quarter was softer. Where does the bond market stand today?
There's more clarity approaching the third quarter. As you mentioned, the Fed already reduced their policy rates. BSP is already on an easing cycle, though we still expect one more. So there's clarity that the direction for yields is really on the downside. So
and there's clarity that we're still resilient. The 10-year still trading below 6%, that resistance level. Still resilient. Why still resilient?
It's probably because the market is focusing on the fundamentals, the macroeconomic fundamentals, which remain relatively good despite the risk of slower growth.
That's right.
Our inflation remains very benign. It's going to likely average below the BSP's 2 to 4% target. So that alone is very supportive of the bond market. Plus, as mentioned, I think last time, the inclusion in the JP Morgan index would attract foreign flows coming in. So there's a lot of liquidity to support the market. And for the time being, that's why it's really resilient at this point.
And despite all the negative news, bond markets thrive amidst the liquidity. Even as GDP growth, the BSP now expects the 6 to 7% growth target won't be met until 2027. When it's not exciting for equities, it's exciting for the bond market. Can you tell us more about this?
We don't want to sound like the bad guys here, but when growth... when there's a risk for growth to slow down, the bond markets actually perform better because it would entail the BSP to be very supportive of the monetary policy. That would
They're
entail,
going to need to.
Yeah, that
Not
would
just
entail,
that, possibly a cut in the reserve requirement ratio as well.
Yeah, more rate cuts, a cut in the reserve requirements, which will be all supportive for bonds to move lower, which is something that the bond traders and the fund managers like.
Yeah, moderate growth, messy politics. It just means go to the safe haven.
Safe haven because you have coupons at the end of the day. So,
okay. Overnight, U.S. Fed Chair Jerome Powell, he was, he stuck to his guns, but other members were seeing that they're, becoming more dovish.
Yeah.
And with Jerome Powell possibly on the way out, do you think that the tone of the central bank in the U.S., the Fed, would change?
Well, I think he's really on the way out. President Trump is very vocal. I don't know if he saw his tweet that if he doesn't cut 100 basis points, he will fire Powell. But he tweeted that just after the Fed meeting. But if you look at the other, I think during the FOMC meeting, a lot of investors were hoping for more dissenters. There was only one who dissented and voted for a 50 basis points cut. Yeah, the new guy, Stephen Moran. So they were expecting Waller and Bowman to probably be a little bit of a dovish tilt there, but they weren't. So that's probably the reason why people viewed the recent Fed meeting as a hawkish cut rather than a dovish cut.
Okay. Now, how does this uncertainty over the U.S. Fed affect peso yields, the peso itself, and even a foreign appetite for our bonds?
It could create some volatility in the short term given the uncertainties when it comes to their rate cut path, especially approaching 2026. But I think it's just temporary. It's just a blip in general, given that the market is very, very liquid at this point. In fact, there's added liquidity coming back to the system. BSP Governor Ramelona issued a statement after the last BSP meeting that they will be unwinding some of their issuance of short-term BSP bills.
Yeah.
Currently, there's around 800 billion outstanding BSP bills. They issued 70 billion less this month and likely another same amount probably the next month. So if you just total it, that's about more than 100 billion, 140 billion coming back into the secondary market. So that with ample liquidity will keep local bonds very much supported.
Okay. Another thing I wanted to talk about, the index inclusion. The Philippines is on JP Morgan's positive watch list for its government bond index emerging markets. If we're included, how much cheaper will our financing get?
If I can't give an exact number because I don't know how much flows will come in at that time, or flows are already starting to come in.
Hard to guess. How will yields move?
I think generally, if I had to make an educated guess, easily 30 to 50 basis points lower in terms of.
Which doesn't seem like much, but that's a lot for bonds.
That's a lot for bonds. That's actually a big deal for bonds because, for example, if your 10-year is at 5.5, it will go to 5. That's a big deal.
Okay, so there's that, and that's our resilience to the scandals, all the corruption scandals, the 100 billion flood control scandal, the political noise. The markets have remained so resilient. What should CEOs, what should the business community take from this?
I think they should lock in rates as everything is still relatively high at this point. I remember our very first guesting, I probably was the only bond bull in the market at that time. But now everyone's trying to get their hands on bonds. But I think anything with a 6% handle is very attractive. So even for the retail investors, in fact, I'll put my sales space on right now. We're actually offering Security Bank bonds, 5-year bonds at 6%. If you recall, during our last interview, before the RTB issuance, I said the RTB at 6% is very, very attractive.
Okay.
And it's now trading at around 5.78, 5.80. So people who bought RTBs at that time were rewarded with a very good return.
So whether
already.
you're a CEO, a CFO, or a retail investor, now is the time to lock in bonds. Even as expectations for GDP could be revised lower. Even as, and with that said, interest rates BSP is going to be more supportive.
Yeah.
So because the yields
Will
may not
move lower.
the yields will move lower. So now is that time.
Now is the time.
Okay. On another front, I wanted to talk to you about the government. They plan to raise 627 billion in foreign debt next year, government borrowing for 2026. With global uncertainties, how do you expect the appetite for peso and foreign currency bonds to hold up? Well,
yeah, I think it will hold up well as long as these issues are not disruptive. It's not really disruptive. It's more
it's
of
just
like
noise.
just noise. Yeah,
Focus on the fundamentals.
Yeah, focus on the fundamentals. In fact, our JP Morgan inclusion was announced this month, despite the noise, right?
Correct.
So,
Correct.
so they don't really look at that.
To show
Yeah.
it goes the other direction.
And we've been through a lot of these noise from the past, and the bond market hasn't really been affected that much. Yeah.
On another front, Congress recently slashed by 255 billion from the DPWH budget after double entries and repeat funding were uncovered. What does this say about the fragility in our fiscal credibility?
It's hard to tell at this point, but if you
Too soon?
Yeah, just too soon. But if you just break it down to the basics, it would mean less government spending, less government investment. So that would entail risk to slower growth, which again, unfortunately, the bond markets would relish on.
Okay, looking out to 2026, heavy borrowing needs, index inclusion, and growth risks. Where do you see the 10-year benchmark trading, and what's the implication for corporate loan rates?
It will likely move lower to around the 5.5 handles, given that the BSP is set to reduce one more this year and probably another 25 to 50 next year because of benign inflation, and we have to support growth. So we'll likely see a lot of the bond yields in the yield curve trading below 6 next year.
Okay,
Yeah.
and as we step into this, really step into this second half and look towards 2026, how would you describe the state of our markets today?
Well, it's been a roller coaster ride. So basically, if you look at it, it's just really a roller coaster ride. But at least it's finding its footing. It's finding some clarity. It's finding some direction already. Yeah.
Okay, all right. Dino Aquino,
Yeah,
thank
thank
you
you
for your time today, the Vice President and Head of Fixed Income at Security Bank.
Thanks for having me again.
We're going to be taking a short break. Business 360 will be right back. Welcome back. SM Investments Corporation has begun executing buyback transactions under its 60 billion peso share repurchase program. In the disclosure, the company said the trades made on September 23rd will settle on September 25th. The board approved the program last February, allowing up to 60 billion pesos worth of common shares to be repurchased, with management given flexibility to set the terms in line with the company's best interests. Ayala Land continues its share buyback program, purchasing a total of 2.3 million common shares on September 23rd. In the disclosure, the company says the shares were bought at prices ranging from 26.20 to 26.35 each. The transaction reduced outstanding shares to 14.53 billion and increased treasury shares to 2.18 billion. Flood control remains a pressing challenge for the Philippines, but one company is showing how innovation can turn risk into resilience. MegaWorld is redefining sustainability with its Capital Town Rainwater Park in Pampanga, a project that blends flood mitigation, environmental protection, and community development. Let's watch this.
Flood control. It's what everybody's talking about right now, and rightfully so, because the Philippines is one of the wettest countries in the world. Right now, we are here in San Fernando, Pampanga. Now, because of its geography and location, it's considered one of the most flood-prone regions in the Philippines. Since we're on the topic of flood control, I thought it would be a good opportunity to show you what developers like MegaWorld, developers of townships like this, are doing to help solve this critical problem. Right now, we are here at our township in San Fernando called Capital Town. This is a 35-hectare township that used to be the Pampanga Sugar Development Corporation, or PASUDECO. Before we started developing this area, when it rained, the area around the Capitol building would flood, and the flooding would reach waist high, and it would take up to a week for the flood to subside. It was really a terrible inconvenience for the community around. When we started planning this township, we took that into mind and we wanted to be a solution to that problem. In the middle of this township is a 2-hectare park which we call the Rainwater Park. The main feature of this park is the water retention facility we have surrounding the entire park. So when it rains around the city, the water is actually collected by our box culverts and brought here to this rainwater park. When it stops raining and the sun comes out like this, the water is slowly drained into our river systems.
The Independent Commission for Infrastructure and the Public Works Department have flagged anomalies in a 300 million peso flood control project in Pampanga. The project in Arayat was finished in 2023 but collapsed just a year later. Public Works Secretary Vince Dizon blamed possible design flaws and gross negligence. Officials confronted contractor Edgardo Sagum of Edimari Construction and Trading, who maintained the project was above board. The Justice Department earlier issued an immigration lookout bulletin against Sagum and dozens of others tied to that flood control scandal. The plot thickens in the so-called Senate flicks as a former public works engineer names more politicians in his explosive testimony. In a sworn affidavit presented at the Senate Blue Ribbon hearing, former Bulacan District Engineer Henry Alcantara tagged former Senator Bong Revilla, Senators Joel Villanueva and Jinggoy Estrada, and Ako Bicol Representative and former Appropriations Chair Zaldi Co. Revilla allegedly pocketed 90 million pesos from a 300 million peso insertion in 2024. Villanueva was linked to 115 million pesos from a 600 million peso multi-purpose building allocation in 2023. Alcantara said that in 2024, Estrada asked him to list 355 million pesos worth of projects with the usual 25% payola cut. The biggest amount was tied to Zaldi Co, who Alcantara claimed pocketed 8 billion pesos from 236 projects worth 35 billion pesos since 2022. He further identified former Public Works Undersecretary Roberto Bernardo as the architect of the scheme. Today, former Bulacan Assistant District Engineer Bryce Hernandez is set to hand over to the Department of Justice a computer which is said to contain damning evidence in the flood control scandal. On Bilyonaryo news channel's On Point, his lawyer, attorney Raymond Fortun, said that the evidence holds complete records of all projects in Bulacan's 1st District, including contract amounts and their congressional proponents. Fortun added that the files will identify more politicians who allegedly received kickbacks from anomalous projects.
According to Bryce, and also now confirmed by Henry Alcantara, the information was supplied by Yusek Bernardo.
Okay.
Yusek Bernardo would be the one to say, "Oh, ito project ito ni XXX."
So and so. All right.
And it is given to, and that information is given to D. Alcantara. D. Alcantara will also need to inform Bryce Hernandez and JP Mendoza over here, as to who is the one who has an interest in this particular project. Why is that important? Because later on, as it unfolds, it is the role of Bryce and JP to talk to the contractors and tell them how much they are supposed to collect for purposes of complying with the obligation of the proponent.
No payback, no protection. Senators want witnesses in the flood control scandal to return stolen funds before entering the program. At the resumption of the Senate Blue Ribbon Committee hearing, Senator Bam Aquino asked Justice Secretary Jesus Crispin Remulla if restitution could be made a requirement for state witness status. Remulla replied that while it is not current policy, such a condition would be a good test of witnesses' reliability. The proposal was opposed by Senator Rodante Marcoleta, who argued that there is no law mandating restitution. But Senator Kiko Pangilinan countered that there is also no law preventing the return of stolen wealth in good faith. Senator Erwin Tulfo backed the idea, saying that sometimes the law must be bent to satisfy public demand for accountability. We're taking a short break. Business 360 will be right back. Welcome back. U.S. President Donald Trump now says Ukraine can reclaim all territory seized by Russia with the help of NATO and European allies. The remarks mark a major reversal from his earlier position that both Kiev and Moscow would need to cede land to end the war. Trump stressed that Washington will keep supplying weapons to NATO, leaving the alliance to decide how to deploy them. He also criticized Russia for what he called an aimless war, warning that Moscow now faces deepening economic troubles. Ukrainian President Volodymyr Zelensky welcomes U.S. President Donald Trump's latest statements on the war. Zelensky has been calling on Washington to step up sanctions against Russia to force Moscow into negotiations to end the conflict.
I said it from the first second of our today's meeting. I will not share all the details.
But from your perspective, is it a game changer that he now believes, that President Trump now believes?
Trump is a game changer by himself if he will be sure in Ukraine. And I think that he is more close now to this situation. And that's why, and between us, only Trump can, for today. We know some not too much players in the world who can be game changers, but he's the most closer to this.
Elsewhere in the world, super typhoon Ragasa, locally known as Nando, slammed into Hong Kong, forcing the city to a standstill with hundreds of flight cancellations and widespread disruptions. Authorities hoisted Typhoon Cignal number 10, Hong Kong's highest alert, late Tuesday, prompting most businesses and transport services to shut down. Residents raced to supermarkets in panic, buying sprees as powerful winds and torrential rain pounded the city. On Monday, French President Emmanuel Macron phoned U.S. President Donald Trump after his vehicle was stopped at a street blocked for the American leader's motorcade in New York City. Both leaders were headed to the United Nations headquarters. Macron tried to persuade a New York police officer to let him through, but the officer apologized and said that the street was closed. The French president eventually made it across, but had to walk about 30 minutes to his destination, stopping to take photos with passers-by along the way.
You, guess what? I'm waiting in the street because everything is frozen for you.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo news channel.